Live on YouTube as well. As Lisa's just reporting, futures look for a positive open here. We'll have that for you in just a moment. Shana Sissel joins us, CEO of Banríon Capital. Shana, what kind of conversations are you having with your clients today? Are they glass half full people buying or glass half empty people saying this thing could get even worse from here?
So, under the caveat that I don't deal necessarily with individuals or even advisors that are looking broadly at markets, I kind of deal with a subset of advisors who really like to look at other ways to manage risk in portfolios, specifically through alternative strategies. The vast majority of the conversations I'm having are with advisors who are concerned about continued volatility in the market and how they can implement some risk management strategies using alternatives to kind of bolster portfolios to ride through the volatility. And that's really where our focus has been. But I think the takeaway from that is that there's increased interest from advisors and their clients and finding ways to deal with what will largely be an extended period of volatility, because the administration that is in power right now here is known for, making kind of vast decisions, pulling them back, putting them back in. And I think that that doesn't bode well for calm markets. And so that's the kind of conversations we're having.
So in the world of alternatives, which I consider kind of private equity, private credit, hedge funds, those types of things, how do alternatives fit into that kind of portfolio in a time of maybe higher uncertainty?
So most of our advisors are first and foremost looking at the easiest and quickest way to implement alternative strategies into client portfolios. So that's through ETFs and mutual funds and interval funds, mostly ETFs at this moment. We have a suite of clients that offer ETF solutions that are hedge fund-like. And I think that that's kind of the key here. Private equity, private credit, that's equity and credit at the end of the day. They may not mark to market, but they are very much influenced by what's going on in the public markets for equity and credit. But the hedge fund-like strategies are doing investment philosophies that are inherently diversifying and inherently about hedging out risk, hence hedge fund. So there are ETF mutual funds and interval fund strategies that implement those. And there are things like BTAL, which is an equity market neutral fund, CBLS, which is an actively managed long short equity fund, RDFI, which is closed end fund arbitrage.
Yep.
MRSK. So these are like hedge fund-like strategies. And if you look at how they've performed during this period, they've actually done extraordinarily well and outperformed the market. So implementing strategies that are diversifying in client portfolios is how we manage risk during volatile times.
Shana, we're going to come right back to you right now. We want to get the markets open. Elise Mateo.
All right, let's see how this market's rolling, because we had some optimism over trade talks. Will that settle in to close out the trading week? We'll start with the S&P 500. It's up 0.3%, 19 points, 5,683. The Dow up 0.2%, 102 points, 41,476. And finally, the Nasdaq up about 0.5%, 92 points, 18,021. So a positive open to the markets this morning. We'll go to the yield space. The 2-year yield 3.85%, down 2 basis points, and the yield on the 10-year 4.37%. That's down 1 basis point. Brent crude up about 0.7%, $63 a barrel. We go to spot gold up about 1%, $3,338 an ounce. The Bloomberg Dollar Spot Index down about 0.2%. At the open, checking with a few stocks, what's really been on the move all morning long. Pinterest up 6%. We have Lyft up 16%, and Expedia down 11%. That is your Bloomberg Opening Bell report. Jess and Paul.
All right, Lisa Mateo, thank you so much. We appreciate it. Jess Menton and Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. We're speaking with Shana Sissel, CEO of Banríon Capital. Jess.
So I actually want to talk to you, Shana, about your view when it comes to retail. I know we'll have Walmart actually reporting earnings next week, and we'll have a Home Depot, Lowe's, Target the following week after that, later in May. How are you viewing that? Because I know Walmart in particular was trading more like a growth stock before its last earnings report. There are only a couple of Mag 7 stocks that actually had done better than that over a 12-month span, like NVIDIA and some others like that too, and Tesla. But, how do you view and how are you positioning when it comes to retail shares?
So I'll start by saying that we have this very weird dichotomy going on with the consumer here in the US, where their confidence numbers are not great And we're seeing sentiment with consumers really being negative, but their spending in the retail actual spending numbers remain quite strong. So there's this weird dichotomy there that makes it hard to kind of predict how some of these retail names are going to do. Now, that said, a company like Walmart, you got to look at that's a company that has some pricing power, has the ability to kind of bully around some of their suppliers. And if we continue to have above average tariffs, specifically with China, where a lot of the goods, especially the lower cost goods that we have here in the US, come from China. That's going to be positive for something like Walmart. You would also intuitively think that would be good for something like Target, but Target's had some execution issues as of late. So it'll be interesting to see how that plays out. But if you look at some of the retail companies that are focused on the lower income consumer, they have done well, but it's kind of the middle of the pack names that have done best. But I would think that if the tariffs stay quite high, we haven't seen that come through in the numbers yet because there was some pre-ordering of increasing inventories before tariffs took place. But I think as that changes, you might see the middle income consumers start to move into the Walmarts of the world. And that would be positive for a name like Walmart. But you have to be really particular where you pick your spots in retail, because retail is a very large space and it includes names like Nike and Adidas, Under Armour, and some of the apparel brands. And those brands will be disproportionately impacted by the tariffs. So I would probably stay away from apparel brands, shoes, things of that nature, anything that is manufactured overseas, specifically in China, and focus more on, like you said, like where you go to buy your groceries and things of that nature, where people are going to be wanting to save money because there's really no way to avoid the tariffs in other essential areas.
Shana, thanks so much for joining us. Shana Sissel, she's the CEO of Banríon Capital, offering up her thoughts on these markets. Again, as the market is trying to discount what the economic impact will in fact be from this higher tariff policy, however it shakes out.
That's true. And I mean, it's going to be, we've had over 2/3 of companies report in the S&P 500 just listing earnings growth over 10%, like we were mentioning earlier, for the first quarter. And even on an annual basis, even though you've seen it come in a little bit for the first quarter, for this year rather, you're still seeing it pretty strong though for next year too,
Yep,
Paul.
absolutely. Coming up, Ankur Daga, he's the CEO and founder at Angara, discusses U.S.-India tariffs, implications for the diamond market, and how CEOs are strategizing amid tariff uncertainty. We've seen a lot of companies pull back on their guidance, pull their guidance altogether.